Have you ever wondered what it would be like to have Warren Buffett as your personal investing mentor? In the grand arena of investing, few names resonate as profoundly as that of Warren Buffett. His financial acumen and investment prowess have amassed a net worth that dances in the realm of the tens of billions. His legendary success as an investor has earned him the moniker of the Oracle of Omaha. The secret to Buffett's success lies not in complex algorithms or esoteric financial instruments, but rather in timeless principles that have weathered the storms of market fluctuations for decades. To many, investing may seem like a labyrinth of numbers and jargon. Yet Buffett has simplified this perceived complexity with his straightforward philosophy. Today, we're going to delve into the wisdom of this oracle, distilling his insights into 5 simple rules that can guide anyone through the labyrinth of investing. These rules can empower you to navigate the market's complexities and help you build long-term wealth. Firstly, Buffett advises investors to stick to their circle of competence, investing in what they understand. Rather than chasing the latest trends or hot stock tips, the focus should be on companies whose products or services are familiar and understood. Secondly, he emphasizes investing in high-quality companies at a reasonable price. Such companies have strong competitive advantages or economic moats and can consistently generate profits over the long term. However, even the best businesses can be overvalued, hence the importance of patience and discipline. Thirdly, Buffett's approach is long-term oriented. He believes in the power of compounding and advises investors to resist the temptation of short-term gains. Fourthly, he advises against letting market noise dictate investment decisions. Instead, he encourages investors to focus on the underlying value of the businesses they own. Lastly, despite his unparalleled success, Buffett remains humble and emphasizes the importance of continuous learning. He acknowledges that he doesn't have all the answers and recognizes investing as a lifelong journey of discovery. Today, we will distill some of his wisdom and bring you 5 simple rules from Warren Buffett that can help you navigate the complexities of the market. First off, Buffett advises investors to stick to their circle of competence. This implies investing in businesses and industries that you understand thoroughly. You see, the world of investing is wide and varied, with thousands of companies across countless industries. It's easy to feel overwhelmed. But here's a secret. You don't need to understand everything. What you need is to comprehend the businesses you're investing in. Consider this. Would you buy a car without knowing how it works, or a house without understanding its value? The same principle applies to investing. When you invest in companies whose products or services you use and understand, it's like having home field advantage. You're better equipped to evaluate the company's potential, make informed decisions, and ultimately increase the odds of your investment success. So, rather than chasing the latest hot tip, focus on familiar territories. It's not about the trendiest stocks, it's about understanding where your money is going. Secondly, Buffett is known for preferring high-quality companies with strong competitive advantages. These are companies that have what's called an economic moat. An economic moat, like a physical moat around a castle, protects a company from its competitors. This could be due to brand reputation, patented technology, or a unique business model. These moats allow companies to generate consistent profits over the long term. However, it's not just about finding these high-quality companies. It's about buying them at a reasonable price. This is where patience and discipline come into play. The stock market has its ups and downs, and prices fluctuate. It's important to wait for the right opportunity to invest in a quality company when its stock price is fair or even undervalued. It's like shopping for a high-end designer bag. You wouldn't want to pay a fortune for it, but wait for a sale, right? Remember, even the best businesses can be overvalued. Thirdly, Buffett's approach to investing is decidedly long-term oriented. Unlike the thrill-seekers who jump from one hot stock to another, Buffett believes in buying and holding on to quality businesses for extended periods. It's a bit like planting a tree. You don't dig it up every other week to see how the roots are doing. You water it, give it sunlight, and let nature do its thing. Over time, that little sapling grows into a sturdy tree. And that's the power of compounding, the secret sauce of Buffett's success. When you reinvest your earnings, those earnings generate their own earnings, and so on. It's earnings on earnings, growth on growth. It's like a snowball rolling downhill, gathering more snow and growing bigger with each roll. But remember, time is a crucial ingredient in this recipe. So resist the temptation to trade frequently in pursuit of short-term gains. Be patient, be steadfast. In the world of investing, slow and steady often wins the race. Fourthly, Buffett advises against letting market noise dictate investment decisions. In today's hyper-connected world, investors are constantly bombarded with a stream of market news and noise. It's easy to get swept up in the frenzy and let this noise influence your investment decisions. However, Warren Buffett encourages us to tune out these short-term fluctuations and instead focus on the underlying value of the businesses we invest in. Think about it this way. When you purchase a stock, you're buying a piece of a business, not just a ticker symbol. It's crucial to understand the business's fundamentals and believe in its long-term potential. Temporary market fluctuations should not cloud your judgment or steer you away from your investment strategy. This approach requires patience and discipline, but it can help you avoid making impulsive decisions driven by fear or greed. Remember, the goal is to build long-term wealth, and focusing on value rather than noise is key to achieving this. Avoid making impulsive decisions driven by fear or greed. Finally, despite his unparalleled success, Buffett remains remarkably humble and grounded. This humility is not just an admirable personal trait, but a key ingredient to his investment strategy. You see, Buffett understands that the world of investing is constantly evolving, and so must the investor. He emphasizes the importance of continuous learning in this field. Investing, as Buffett views it, is a lifelong journey of discovery. Whether it's delving into annual reports, poring over historical market trends, or seeking wisdom from trusted mentors, there's always something new to learn. This approach enables him to adapt to changing market conditions and improve his decision-making over time. This humility to accept that we don't know everything, coupled with the curiosity to learn more, can greatly enhance our investment prowess. It empowers us to make informed decisions rather than simply following the herd. Remember, staying humble and open-minded can improve your decision-making over time. In conclusion, Warren Buffett's simple yet profound rules for investing provide a timeless blueprint for success in the stock market. His wisdom teaches us to invest in what we comprehend, buy quality companies at fair prices, adopt a long-term mindset, focus on intrinsic value, and continuously learn with humility. These principles are not just strategies, they are the bedrock of a successful investment journey. While there may be no guarantees in investing, following Buffett's principles can certainly tilt the odds of success in your favor.